the thing is, in the US, there's not a real estate market, right? And you know this, and I want to make sure everyone listening knows this. There's not a real estate market in the United States. So different kinds of real estate are in different stages of the market cycle. So single family home cycles are not the same as multifamily real estate cycles, are not the same as, commercial mixed use. Right. So everything has a different cycle where it's a good time to buy or a good time to sell or a good time to hold. And so I want everyone to think about this because, I've learned about all different kinds of real estate investing so that when it's the right time to do this asset class, I can do that asset class. When it's the right time to do this other thing, I can do that other thing. And I also want to call out that each location in the United States is really different. And so, for instance, when the real estate market in Houston is doing something, the real estate market in San Francisco is doing something else, and they're not doing the same thing. So for instance, Phoenix, we all know what was going on in Phoenix. If you're a real estate investor over the last couple of years, it was like the place to be, the hot market, like everyone was just screaming to get in there. And now the reports are coming out that it's like, it's the number one place for rental decline in the United States, these sort of things. While Houston, the rental rates are going up 12, 16% per year. So Phoenix and Houston not doing the same thing. So it's really important when you're an investor. So it's really different from, the last person you had who was speaking about when you're buying your home, you're spending money on real estate because of you personally, your emotions, where you want to live. When you're investing, it should be totally not correlated with where you want to live.
That's the best part of it.
Yeah, you don't have to live there if it's investment property, whether it's an Airbnb or a single family home rental that you have, or duplexes, or if you're in something passive like a REIT or a multifamily syndication, which is what I do. Those are 100% passive. So it doesn't matter where they are, someone else is operating it for you. And so you're going to look at the markets that are still performing really strong, given what's going on in the rest of the United States, right? So there's data you can look at that's relative data, and then there's absolute data. So like unemployment rate, you're going to want to look at relative data. What's the unemployment rate in Houston versus the rest of the United States? That tells you where people are going, where the jobs are going. And so supply is going up, but not as fast as demand is going up. So that's a great place to have product. So I love that question because it's like I could talk for an hour on what's the real estate market doing, because each city, each MSA is really different. And so I live in California. I live in San Francisco. I will not buy investment property in California, but I'm all over Texas. I'm all over Alabama. I'm all over the Carolinas. There's other really great markets, and so you got to look at all that kind of stuff, and you look at job trends to know which is really influenced by local government and incentives that they're giving and those sort of things in order to see where people are migrating to. And especially right now, migration happens really fast, right? So we saw that in moving companies put out this data, like what's number one ingress, number one egress cities. So you can see, okay, number one place everyone's moving to, number one place everyone's leaving. So you know where to buy and sell.